Hi, my name is Christian Waldegrave and this is our conventional tanker market update for January 2013. And since it's our first update of the new year, I thought this would be a good chance to review what happened in the tanker market during 2012 and look ahead to what we think might happen in 2013. And if we look at the tanker market in 2012, overall tanker fleet utilization didn't really change much from 2011. We saw about 4% tanker fleet growth during the year, and we saw roughly 4–4.5% tanker demand growth as well. So fleet utilization stayed pretty low, in the low kind of 80% range, and therefore earnings stayed fairly low on a historical basis as well. But that doesn't really tell the full story of the year. It was actually pretty much a year of two halves in the tanker market in 2012. In the crude tanker sector, what we saw that we had a fairly strong first half of the year. And that was because we saw a lot of crude tanker demand due to stockpiling of oil, and that was because people were building their stocks back up in case of potential supply disruptions from Iran. And it was also due to some strategic stockpiling in places like China, where they were just building up their strategic reserves. What we also saw through the first half of 2012 was quite high levels of OPEC crude production. And high levels of OPEC crude oil production are generally positive for crude tanker demand, because OPEC producing countries are quite far from the consuming countries, so that means longer voyage distances. So through the first half of the year, we had fairly good earnings on the VLCCs and Suezmax. I think we saw about $27,000 a day on the Vs and about $21,000 on the Suezmaxes. Afras came in about $14,500 a day through the first half, which was lower than the bigger crude sectors, but that's probably because the Aframaxes aren't quite so tied into these long-haul crude tanker movements and the OPEC production, and they're more influenced by regional factors. But if we flip to the second half of the year, it was a big turnaround in the crude sectors, and we saw earnings in the VLCC segment plummet to just $10,000 a day in the second half, and the Suez came down to $11,000. And that was really because a lot of that demand for stockpiling that was there in the first half of the year fell away through the second half. We also saw the Chinese economy slow down quite considerably during the second half of the year, at least in a period between sort of May and around September. We saw far worse figures in the Chinese economy and manufacturing, and their imports suffered as a result. And we've also seen in the second half of 2012 as well that OPEC production just started to come off a little bit, and that affected the voyage distances as well. So definitely it was a year of two halves for the crude tankers. It also was for the product tankers as well, but almost in reverse. If we look at what happened in the LR2 segment, the first half of the year was very poor for LR2s. In fact, average spot rates for the LR2s for the first half were just $5,000 a day, which is very, very low, below operating costs. But then in the second half of the year, we saw a big turnaround and we saw LR2 rates come up to $15,000 a day. And that's because we saw a recovery in Asian imports of naphtha, which is a key product for the LR2s. And we also saw more arbitrage movements of naphtha coming from the West, from Europe into Asia as well. So a bit of demand came back into the LR2 market and made it a stronger second half compared to the first half. If we look to 2013, again, starting from the high level, I think we'll probably see not much change to tanker fleet utilization for the coming year. We do think that the tanker fleet growth will come off a bit compared to last year. We're forecasting about 3% tanker fleet growth this year compared to 4% last year. But at the same time, we also think that tanker demand will be slightly lower than in 2012. And that's because if we look at oil demand growth on a global basis, the major forecasting agencies are predicting growth of about 0.9 million barrels a day this year, which is comparable to 2012, but at the same time, the expectation is that OPEC production will be lower, which means fewer ton miles. And the reason for that is because we expect quite strong growth in non-OPEC production, particularly in North America. In fact, the EIA just published their monthly report, and they think that US production alone will grow by 0.9 million barrels a day this year. So the expectation is that OPEC will start pumping less oil, and in fact, we're already starting to see that in the January numbers, that Saudi Arabia, who were producing at 10 million barrels a day at times last year, have now come down closer to 9 million barrels a day. So that's going to have an effect on the large crude tankers through the first half of the year. But I think almost 2013 is going to be kind of a mirror image of 2012 in that the worst part of the year will probably be this first half when we see lower OPEC production and also probably the bulk of the new tanker deliveries that are coming in. I think as we get to the second half of the year, we'll see a slowdown in tanker deliveries, and then we'll also start to see a slowly improving global economy and better oil demand through the second half as well. And I think that really leads us into 2014, which is when we expect a much more sustained tanker market recovery. Because if we look forward to 2014, tanker fleet growth is probably going to come down to about 2%, just given what's on order at the moment, and given that there's probably not a lot of time now for owners to go out and order new ships for 2014 delivery. And as we said, at the same time, we expect that the global economy will start recovering as we go through 2013 and then into 2014. So 2014 is really the year when we expect we'll see tanker demand meaningfully higher than tanker fleet growth, and we'll start to gain some percentage points in tanker fleet utilization and therefore better earnings. So yeah, our outlook for this year is probably expecting on an average basis more of the same, but a gradually improving year as we get towards the end of 2013. So that's our tanker market update for January 2013, and join us next month for our next update.